This is going to be the most important video you watch because what we are about to show you is undeniable evidence that points to one commodity's shortage, literally tearing apart the markets. This is going to happen within the next year. Due to some foul play by industry insiders and misinformation by the financial media, we believe silver is likely the most undervalued asset available to investors today. Over the past decade, the ETF SLV has siphoned off a significant amount of demand from both the physical silver market and the mining shares themselves. The COMEX has also regularly been used to manipulate the precious metals through margin increases, massive selling during holiday hours, and the fact that the futures market just doesn't have the metal to support all of the trading that goes on. In the end, this is going to be about supply disruption in the face of surging demand for monetary purposes. It is true, silver is used for many industrial purposes. Help is coming from investment demand. On the supply side, silver and many metals and minerals are experiencing serious supply destruction. Producers are now selling silver for market prices, the cost of production itself. We are already seeing major zinc mines shut down operations this year in Australia and Ireland, with even more planned closures for the next year. They reported record zinc conference call literally stated that one of their most profitable mines, the 777 mine, was now approaching the end of its life. The supply is shrinking faster than demand. However, in silver's case, supply is shrinking dramatically from both future expectations from silver mines, silver exploration, and other metal mines, and demand is soaring due to its monetary history. Here are the raw numbers for total supply for the past, which is in a full-blown collapse. It came from scrap. By 2014, the number was down to 168 million ounces, falling 3 consecutive years. Mine supply went from 754 million ounces to 819 million ounces, completely filling that void. However, as of 2015, we can clearly see that the mine supply will begin to fall for silver at the floor, higher than they were in 2010. Where we are seeing a major increase is in coin and bar demand, which has exploded from 87 million ounces in 2009 to 245 million ounces in 2013 and 100 million ounces last year, shrinking. One only has to wonder if demand will let up in silver, or if what we have seen thus far for its increase in demand will continue, or even see a tsunami of demand in 2016. FutureMoneyTrends.com sees 3 trends in 2016 that will cause a surge in physical demand for silver, which will cause a supply shortage and present investors and speculators with what will be one of the greatest commodity plays of all time. 1. Low prices. As legendary investor Rick Rule is often heard saying, the cure for low prices is low prices. Physical demand has been surging as silver makes new lows in its current bear market. With the world so bearish on commodities, silver will likely see newer lows in 2016, perhaps to 12, 10, or even as low as $8 an ounce for silver, prior to setting new all-time highs between now and this time next year. At $8 an ounce of silver, you'll have primary silver mines running skeleton crews, and if silver does touch $8, that will mean the other metals and minerals like zinc and copper will be seeing massive layoffs, already starting at 4. China is imploding. Russia needs higher oil prices. Monetary fixes since 2009 were all suicidal. Distraction from bad policy during an election year is war. We are already seeing skirmishes in the Middle East. 9/11 war footing here in the U.S. since San Bernardino and Paris. 3. Bonds. The bond market, sovereign debt crisis, junk bonds, or corporate will put gold at the top of headlines. And with gold, many investors will buy silver. We already know from bullion companies and the Sprott funds, investors by the ounce buy about 10 ounces of silver for every 1 ounce of gold. So it is safe to say if investors flee into gold, they will flood into silver, whose supply is much smaller. The above ground available supply of gold for silver 1 billion ounces, and coins like the American Eagle less for silver. The perfect catalyst for silver to roar through the $50 an ounce mark is here, and it is happening in 2016. Demand is surging, supply is contracting, and there are three separate but very likely catalysts to bring a renewed wave of demand for silver coming in 2016. Even one of them making a headline could send the price of silver soaring. FutureMoneyTrends.com has just released our 2016 action plan, which includes how we intend to maximize our profits in the silver market. Our 2016 guide includes the top 7 trends we see for 2016, top investments, best asset allocation for income investors, and how to profit from China's economic implosion. We also included the perfect hedge for anyone investing in the resource stocks today, including how to profit from falling silver prices even while maintaining your position for silver prices to rise higher. To receive this free report right now, go to FutureMoneyTrends.com